We saw kind of a similar sentiment from Temasek as well. So for GIC, why has that 5-year return fallen when its 20-year has actually risen?
Well, it's mostly a matter of simple math. You know, the last 5 years obviously has been very difficult. We've seen the pandemic, we've seen rising inflation and efforts to combat that. When you contrast that with their 20-year returns, you have to remember GIC doesn't give the 12-month returns. In the last 20 years, fiscal 2003 has dropped off their rotating 20-year numbers. So in other words, because that really bad FY23 dropped off, FY03 dropped off, their 20-year looks good when their 5-year looks terrible.
So how optimistic is GIC for the year ahead?
Well, given the short-term issues that they've already discussed that you can see in the 5-year, not very. They see substantial issues going ahead. You have everything from continuing geopolitical problems to ongoing supply chain worries, as well as problems with continuing inflation and maybe even slowing consumption. Broadly speaking, they're warning that the markets could be quite troubled and growth could continue to slow.
Any bright spots?
In a weird way, the fact that the economy is going to slow is contributing to some of their areas of investment. So they're really focusing on things like private credit right now. If you presume that banks are going to be tighter in lending, that in turn means that companies need money from people willing to lend them money, and GIC is increasingly playing that role, both directly and indirectly. It's also seeing bright spots in property, believe it or not, as well as infrastructure. And when they say property, they don't mean housing or offices per se. They're talking areas like logistics. They gave one example to us in an interview, Indian logistics and warehouses to ride along with the consumption growth in that country.